TradeTheMBI.com. This is John's report is for the 27th of October, and the market's given us a little bit of mixture here. We had new high made, finished down towards the lows. Not surprising after a multi-day run, 3 days pause. This would be the fifth day we would expect it to be finished to the higher, but here's where we start to see a little bit of difference. We've got the DOC cyan popping with steel crossing below, so short-term buyers crossing below shorts. That's a little bit of an imbalance, but we're not seeing that same carry through from an MBI standpoint, and not to mention we even have higher magenta MBI as well as MBI yellow moving forward. So that consistent with the DOC red rising. So this is long-term buyers. This is real money popping in here to support right where we're at this particular stage. And again, this all began with that magenta moving above here, and it hasn't been back below yellow since that move. We've had some spikes of MBI of the white, indicating that there was more short pressure, but it wasn't enough to extinguish the fact that well, all the way back from when we made the first set of lows, right back here down to 35. The bullish push had begun. It was just a clarification once the DOC orange dipped below it, and it's continued ever since then. Yes, some back and forth, but overall, it's an indication that nobody believes the Fed can stay out of what's coming, that there's going to have to be some kind of intervention, and that they're not going to stick with the inflation fighting as things start to deteriorate. And ironically, the thought of deterioration is bullish to the market, simply because it changes the value of money over time. And from an NQ standpoint, far weaker. You already have MBI weight over magenta again now. Magenta still staying above yellow. Close though, pivot there could spell serious trouble. And you don't even have steel yet below the cyan. Uh, so a little bit of variation there, and I think that is probably reflective of what we're starting to see. Some of the earnings, some are apocalyptic, others look pretty decent. But the problem you get in a scenario like this is that with inflation starting, you end up with corporations making outsized profits in some cases, depending on the industry. And the problem with that is that they sold goods that were far cheaper than their replacement costs are today. And by the time they go to produce them in the future, they'll be far higher, and that will really impact profits dramatically. Of course, they spend that money as though it's going to continue because they can never assume that things are going to change, and then they end up in trouble later on. So that's where we look for like Q2 next year will be interesting as some of this price increase has to be absorbed. And of course, this is exciting news for the euro that the dollar is going to, come back down to reality, given the fact that the Fed will stop with its interest rates. Of course, not going to be hard for us to tell whether interest rates are stopping. We're just merely going to go to TLT and look at the treasuries and see whether or not the bond market agrees, which I think that we're pretty clear that it won't. Primarily, we look here, gold. There's a bullish case for gold too, because it suggests that there's going to be no taming of inflation, that it will continue, and you develop some version of stagflation. And the difficulty with it is right now, it's not unsalvageable. It's just sort of in a flux point at this particular stage. It's that awkward moment where we're not precisely clear as exactly how it's going to play out, and doesn't happen that often. I mean, obviously, it's made worse with all of the sanctions and bifurcation of economies and the growing world tensions. From an oil standpoint, 87. I mean, when you think about this, there's no change in the availability of oil worldwide from years ago, and yet we're more than double the price for political reasons. So those are interesting factors, and it doesn't look like it's anytime soon going to change. Nice strong magenta rise, green over cyan. I mean, these are all bullish indicators um, for new leg, and that one could be a bit more dramatic because if the dollar starts to fall, oil will dramatically increase because they're not going to take the haircut on a devaluation of the dollar. So here we see TLT, and well, we had a nice solid jump early on, of course, being led by red MBI on that, so I wouldn't expect it to go too much. But that softening definitely expressing some of the weakness and some of the potential expectation that maybe the Fed is just going to pause. We've seen some liquidity bonuses, and it seemed pretty coordinated when the market all turned together worldwide. And I think that this was a systemic thing that we saw from Bank of Japan, England, and certainly after the EU election. They knew they needed to coordinate to prevent things from getting out of hand. So it appears they've done their job. I've been making the case for Bitcoin for the last several weeks, and it's starting to make a little bit of action. Interestingly enough, too, you get issues China related as Xi is putting a lot more consolidation. You had that whole incident in their little meeting where the former president and that was escorted from the room. No one's heard from him since. That could just be coincidental, or some people fear that he's taking a stronger, harder line on squeezing things, which means there may be some that want to do a little bit of capital flight, and this would be your vehicle to do that. We'll see how it continues to play out, but I just still think it also becomes a good option when all fiat currencies become a little bit uncertain. You get something that's completely unrelated to it. It's an option. From a 50K standpoint, we had the nice little dip coming down and soft turnaround. It's pretty clean here. Once we came across right at the 50%, magenta was over yellow throughout it. The white was still expressing some more weakness going across until it crossed right about here. And then once we were over that 50, it's been maintaining pretty solid. And you also get the green DOC. So all those things lead to a bullish attempt coming back and form some form of a double top if it's not able to break out to the new highs into the 39 range. I think that might be a little bit tough. Intraday, it saw some pretty clean bullish. I mean, these are just some like nice ABC action going through. A lot of it clean, and again, all similar to what we're seeing on the other ones, where you get these breakout moves of white MBI starts to make a move lower, and magenta kicking back in. It's just new money popping back into place. The interesting thing about that, though, is you would still expect that zero to hit somewhere around 37. Um, but you can have that kind of move that goes against it. And there you had it. Look at that. Just nice, beautiful shoot up. But you start to develop positive extremes, mark our little areas, and then boom, nice fill back. That was so clean, too. Right at the previous algo levels, sandwiched in between this tight level. Put in that sell signal now here. It knew to go with the magenta a little bit early. Certainly, you could wait another bar or two until you get the clean uh, DOC where signing is no longer just sitting over red, um, which I think is a prudent thing. Fine, you're not going to get peak price, but when you're expecting a much larger move, it's not really as big a factor. And you can see that we came all the way down to that 37 range, just a fraction over it, or we slightly just slightly under 36. So, that white MBI from before filling back in much later in the day after significant counter move, but nonetheless still did what was expected overall. And then we can see the bullishness coming in here into the pre-market, pushing us right back up to that 3860 algo, kind of hitting a little bit of resistance right there, a little bit of soft spot. So we can see a little fade back. But overall, like I was saying before, I expected the ranges to be good, and I also expected it to be just choppy back and forth. And I think we're going to get more of that as we start to clarify the last couple of days of the month. Theoretically, at the end of this month, you would figure that with earnings reporting and that we may start to see new money flow in with the potential for buybacks and that, and some people seeing discount in their shares and thinking that they can take advantage of that. So we'll see how much of that uh, reported buyback money starts popping in there, and that should really give us some clarity. Um, as to whether some are going to hold off and wait a little bit longer. That would be a real interesting one because that would definitely put more downward pressure on the market. But as always, trade well. We'll talk again later. Look for me on the Skype chat. Have a good one.